After a recent price consolidation, is Harmony One ready to pump? In this video, we're going to dive down into the charts for Harmony One and take a look exactly what might happen next. As we get into this video, if you do find it useful and informative, hit the like button. We really do appreciate that. If you happen to be new, why not go ahead and subscribe, tap that bell, select all notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Right, with that said, done out of the way, let's dive down into the charts and take a look at Harmony One. Okay guys, so we're going to start with this weekly chart. Just to give you the overview, I'd say a lot of people who are new to the channel might not have seen this before, but a lot of the OGs will obviously be very familiar with these 5 impulsive moves that we're tracking to the upside for the bull run. Now, this really started back in March of 2020. Wave 3 basically was the peak of March 2021. Together, that was 18,905% in gains. And obviously, there are 2 pullbacks that we've really truly experienced, right? We've obviously had the wave 2 and the wave 4 pullback, okay, if I can draw an arrow there. And basically what these have allowed us to do is see some growth, right? So obviously we had the pullback initially before the bull run started, and this triggered wave 1. Then wave 3 after wave 2 correction. We've endured the wave 4 correction, and now we are pushing up into wave 5. Obviously, the question that we had been asked quite a bit is, where do we think it's likely to end, by the end of the bull run? Where do we think the price is going to be? And what time do we think Harmony One is going to peak out, right? So in order to really help us answer these questions, we've used a trend-based fib extension. So again, it's like the Fibonacci retracement, which is the tool that is used to basically plot out where your retracements are. Although you can obviously have extensions on that fib retracement tool, which is obviously what we have on our daily chart. And there is one also called a fib extension, trend-based fib extension. And this basically allows us to look at trends within our chart data and predict out where those extensions are most likely to go. Okay, so obviously, for this to happen, we looked at the downward trend of wave 2, we looked at the upward trend of wave 3, and then the downtrend of wave 4. Okay, so these 3 trends, 2 down, 1 up. This allows us to then see where we are likely to push up with wave 5. Okay, so we took the low area of wave 2, the high area of wave 3, and the low area of wave 4. These 3 areas, these 3 anchor points, allow us to see 96.5% on the chart here. This is pretty much where we do think the bull run is likely to end for Harmony One, and where our 5th wave is likely to peak. Okay, this is just probability based on the trends that we've seen in the bull run so far. Now, this kind of price prediction has a timeline kind of associated with it. Obviously, historically speaking, Bitcoin has always peaked first, then Ethereum, and then altcoins. Okay, money rolls around the market. You don't just see everything go at once. There's not that much money pumping into crypto. Instead, money will go into Bitcoin. Bitcoin will peak approximately, in my opinion, around the 20th of December, just based on bull run to bull run cycles. Once Bitcoin has had its peak, you'll see Ethereum have its peak, okay, when money rolls out of Bitcoin into Ethereum. From there, what you'll find is money will roll out of Ethereum and go into various different altcoins. Not all altcoins are going to go at the same time either. You're going to see things like maybe ADA going a little bit later than something like Solana or Polkadot, right? Money is just going to continuously roll around a little bit. Okay, eventually all altcoins will eventually go parabolic at some point, with money kind of rolling around into them. All boats do rise with a rising tide, but do manage your expectations. Okay, so with Harmony One right now, we're trading at 29 cents. And we're talking about moving up to 96.5 cents. Okay, that's kind of where we think the bull run's likely to end. Now, this is going to probably be Q1 of 2022. It's not going to be this year. Okay, it's not 2021. This is a 2022 scenario. Okay, so everything's looking pretty good from a weekly point of view. The structure of these 5 impulsive moves are very, very neat. And they're not the neatest that we've seen, but they're very, very tidy. And allow us to see pretty good growth continuously to the upside. We are just entering this overbought area like we had done previously. And look, if we take a look at wave 3, for example, we actually did a very similar move, although not as good this time around. But basically, we pushed up into overbought, we pulled back down a little bit, then we went back up into overbought, right? So again, we are tracking quite nicely to the upside here. Do expect us to be overbought for a while before pulling back down and then going into a bear market. In terms of the profits, we like to make profit on the way up, sell coins on the way up, and don't sell when the price is falling down, right? Sounds pretty basic and pretty easy. Managing your emotions, on the other hand, is the hardest part of a bull run. Managing the greed specifically, right? Everyone trying to get a little bit more. Be happy with your targets. Set them before you even invest in a cryptocurrency is usually the best strategy, because then you can just execute your strategy. It either achieves its target or it hasn't achieved its target. Okay. The last thing you want to do is basically be like, oh, my target was $1 and now I'm going for $1.20, when there's no support for that, right? Basically, greed is going to be your worst enemy. So manage your emotions, manage your strategy, make sure you have one, understand how you're going to get out of the market as well, specifically as we start to heat up here. And again, this is all ahead of where the real money is made, which is the bear market, okay? So basically, the bear market is where you actually find that you make the money, because with a bear market, what you're doing is building a really good solid position before a bull run, right? Before the market starts pumping. You're buying it when it's going down in value. And this is actually a really good strategy for building a really good solid foundation of your portfolio before you go parabolic into a bull run. Once you're going to bull run, you're just chasing money, right? And in fact, what you want to be doing is buying Harmony 1 either right the way down here at the lowest point or the second lowest point, right? So for us, we're getting into Harmony 1. Actually, we were getting into Harmony 1 around here, I would say. So not too dissimilar to the low end of Wave 2, right? So really build your solid positions much earlier than, up here, for example. That being said, there are still gains to be made right now. Just manage those expectations, right? We have 96.5 cents on the cards, right? That's on the table right there. Obviously, the bear market, once you're slipping down, this is where the money is made, because you want to be buying up a significant portion at these lower areas, riding it up to the upside, and then, as I said before, sell on the way up, lock those profits in, and then buy back once you've dropped into the bear market. So do join us for the bear market if it's something you want to know more about and how to manage and navigate it. It is obviously a different beast into what a bull run is. With all that being said, the weekly chart's looking pretty good. Good targets are associated, good progress is being made, and let's jump on down into our daily view. Now, our daily view shows us some of the things that have been going on most recently. Specifically, obviously, the cup and handle, right? So we had the cup and handle. Just pull that back. Cup and handle pattern, and we hit our target of cup and handle, which came in, I think, at 33 to 34 cents. We hit those, and we actually pushed up higher, up to a high of 38 cents. And obviously, we've consolidated back down. This is perfectly normal and very natural. Basically, nothing moves up in straight lines. So you do need to see some calling off, some profits to be taken. So cup and handle pattern achieved. And obviously, we set out and took out our 1.618. Now, this Fibonacci retracement tool is our conservative model, taking the high of 3, the low of 4, and this one downward trend. This downward trend allows us to see a conservative 80 cent on the cards here on the table. Okay, so basically what this allows us to predict out is a more conservative target that we might want to lock in those profits before we actually slip into a bear market, whereas the 96.5 cent is where we actually think we are likely to peak the bull run. Okay, so two different things going on here. Obviously, this is where we might want to make sure we lock in those profits, but also we're very aware that it will go higher than this, right? Which is fine. You're not going to time it perfectly and get the absolute peak of the bull run. Instead, you have to be happy with taking maybe an 80 cent Harmony 1 token, right? Sell at 80 cent, and let it go up to 96.5, and then welcome it back when it comes into a bear market, when it drops down to 10, maybe even 5 cent, right? Good price to be had when it falls down from its higher areas. Okay, so again, this is a conservative price expectations and price targets that we like to lock in profits against. And again, what people often say in the space is get in late and get out early. Okay, and that's a very good way to make sure you lock in those profits, and you're not going to be left with a bag that you were unintending to carry into a bear market, or worse, the price starts plummeting and you sell when it's actually falling down rather than when the price is moving up. Now, obviously, if you do miss the peak of the bull run and you still got a bag and you're trying to sell it, the last thing you want to do is wait, is basically sell it on the way down. You want to wait for a bounce. Everything will bounce. Okay, nothing moves up in straight lines. As you can see here, we moved up, we bounced down, we moved up, we bounced down, we moved up, we bounced down, right? The same thing when you go down in value. You move down, you bounce up. You move down, you bounce up. You move down, you bounce up. Okay, so you never sell at the bottom. always try to find a bounce if you can. Okay, so on this daily chart, everything's looking pretty good. We're oversold, so we know that the price on the daily chart is looking pretty bullish to a good move to the upside, consolidating nicely where it is right now, down at 29 cents. This is gearing up for a potential big move to the upside. Again, this where we see right now, this kind of price action, this kind of consolidation is what you see here. It's what you see down here. It's what you see down here. And basically, you're continuing this now growth to the upside. So next target that we're really aiming for is 51.2 cents. Again, I don't think it's going to be one foul swoop. It's going to take quite some time, but the target is there. That is what we're going for, and something that I do think is likely to happen. Now, before we jump down to the next level of the hourly, we're going to jump over to 𝗖𝗢.io. For those who do not know, 𝗖𝗢.io use artificial intelligence and machine learning to help us understand the underlying value of cryptocurrencies. There's a link in the description down below. It's completely free to use, so do go ahead and sign up, and I don't think you're going to be disappointed by what you find. Now, Harmony 1 is a B1 rating cryptocurrency overall, which means it's pretty neutral. It's just below the top tier. It's actually come down over the last couple of days. It wasn't a 2 cryptocurrency as it was pumping. It's gone down to an A3 and it's a B1 now. And this is actually fine. We're going to dive down into the data to find out why it has slipped down the way that it has. Obviously, we can see in the candles that the price has slipped down, and that obviously has an impact on the data. So the fear and greed index is a C3. So basically, there's quite an extreme amount of fear in the market for Harmony 1 right now. And this is really interesting because obviously, as the price starts to consolidate, people get worried. They want to just basically sell the coins, lock in whatever profits they've got. And basically, that fear or that, that people have is basically selling their coins at a discount, specifically when you marry this up with a Sharpe ratio. The Sharpe ratio is an A2 rating, basically indicating the rewards outweigh the risks, and actually having exposure to Harmony might not be a bad idea, right? We're above the 50-day average, and we have been above the 50-day average since August, right? Including all the pullbacks that we had in September. And basically, there was a lot of fear up for sale, and basically, you could have bought that fear. And that's kind of what's being indicated here. The sentiment is quite fearful right now, but the Sharpe ratio is basically indicating that we might want to buy it up. Obviously, I'm not offering financial advice. Chris never offers financial advice, and 𝗖𝗢.io are not offering you financial advice, but they are giving you the tools to make your own decisions, which is why it's pretty powerful stuff. As we come down, we have an ROI that's an A1 rating, which obviously is the best rating you can get on the platform. Understandable when it has seriously outperformed things like Bitcoin, Ethereum, Cardano, for example. It's an A2 rating on the moving averages, so 10, 50, 100-day moving averages are perfectly fine. And the 𝗕𝗢𝗔 ratio is an A2, so no problems with liquidity. So overall, the only metric that's out of kilter to the others is the fear and greed index, i.e. the sentiment in the space isn't quite aligned to the rest of the data, i.e. let's buy that fear. So this then ties in nicely to that next level when we get into our hourly view, because we can see that we are consolidating just on the support level down here. We can see that we've had a lot of touches on this area, and this is basically 27.9 cents. And basically we had a good run, I think yesterday, where we're up to about 31.4 cents, so pretty much 31.5, and then we started to pull back down, and now we're actually in this oversold area. We're looking to consolidate and basically now push up, so we can find ourselves finding good support again, just down at approximately 29 cents, and we are now geared up for a big move to the upside. As I said, the 5 impulsive moves to the upside, this now being followed with a correction. Okay, now you can look at this on different time frames, but you would have potentially an A, a B, and a C move here, okay, on a bigger time frame, or it could be full of lots of little corrections, A, B, and C, for example, followed by another A, B, and C correction to the upside, and this is then followed by another A, B, and C to the downside. And again, it kind of follows through, and here is it, and starts to deviate away from that pattern a little bit. So we were tracking quite nicely at this point to see exactly what was going on, but then actually from here it was a bit different, and it's really hard to actually kind of then say that we had an ABC move here. We haven't really had the ABC. So we are watching this, but it is looking like it's actually consolidating and coiling up for a big move to the upside. So it's actually easier to take a look at this on a bigger time frame. So if I were to jump over into, let's say, an 8-hour time frame, and what you actually end up with is this nice ABC correction, right? So you have your A coming down here, you have your B pushing back up, and then you have your C coming down. And what we're waiting for is to basically now see whether or not this is a bigger move to the upside. Now you can, of course, kind of see there's an A here, a B here, and then we are looking for that seed to the upside, right? So we're looking for that break now. We're looking for that big push to the upside where we actually start going and getting some decent traction. Again, this could also be the forming the start of a form of a new impulsive move, right? So after an ABC like this, you would normally start to see another impulsive move. And again, this might be that we have a 1, 2, 3, 4, and then a big 5 coming in up here as well, right? So again, these are the ones that are basically leading us up into these bigger moves. We also had our Elliott wave triangle that broke into into its impulsive move to the upside on our 8-hourly. And we obviously see our ABC correction now. ABC correction could be coming into another bigger move, which takes us up into that second price target. So if I actually jump into our daily, our second price target is 51.2 cent. And if we come back to our 8-hourly, and we can see that this fifth wave could be taking us out into that 51.8 cent area, right? We could basically start to see that really big impulsive move and taking it out to that second price target of ours. So Harmony 1 looks like it's getting quite ready for a pretty big move to the upside, in the same way that we saw with this Elliott wave triangle that was forming down here before we had that big break. And now obviously ABC corrections come in, and it is looking like it's ready to get a good push to the upside, specifically when we take a look at it on the hourly, and even more so when you take a look at it on our daily chart. And completely oversold on our daily, gearing up, ready for a big move. So over the next probably week or so, things are going to get quite interesting for Harmony 1, in my opinion. Guys, I'm going to leave the video there, but if you have found it useful and informative, hit that like button. I really do appreciate that. If you happen to be new, why not go ahead and subscribe, tap that bell, select all notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. With that said, done, and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.